Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Rice is one commodity that has been in the news over the past year. First, deficient rains in eastern parts of India. The world's largest rice exporter forced the Indian government to curb shipments from September 2022. It banned exports of fully broken rice and imposed a 20% export duty on shipments of white and brown rice. Next, neighboring Pakistan experienced one of its severest floods in history that damaged its paddy crops. These two events led to tight supplies in the world rice market. This year, prospects of El Niño setting in have raised concern over the cereals demand-supply balance. What will the situation be? Here's Charles Hart, agri-business analyst commodities of BMI and Fitch Solutions company. Welcome to BL podcast, Charles.
Now, what's happened is BMI has said that the global rice market is set to generate its largest production deficit since 2003-4. When you're saying that this year the production deficit, I'll start again. BMI had said that global deficit rice market in 22-23 is set to generate its largest production deficit since 2003-4. But the market will return to balance in 23-24. Now, how do you see this happening?
Hello, thank you for having me on, and I hope you and all your listeners are well. So yes, you're right. So for the 22-23 season, which runs roughly from July of last year up to where we are about now, to be honest, our forecast for the global rice market was for consumption to exceed production during that 12-month time frame by about 10 million tons. So there's an important point here, which is that a deficit is a different concept to a shortage. Those things are different, particularly because the global rice market rarely generates deficits. The most recent one, apart from this year and last year, was 20 years ago. So when you have a series of long-run surpluses like we have had, you can accumulate inventories, which is what has been done on a global basis. So the point of a deficit is not that physical supply is in question. There are ample supplies. But the point of a deficit is that it implies a slight tightening of the market. And I think we've seen that over the last, you can look back as far as COVID, for a general uptick in rice prices. But over the last 12 months, we've probably seen an acceleration of that uptick. So at the start of this year or towards the end of last year, the market was producing prices that hadn't really been seen since 2008, towards the end of 2008, in a period which, sometimes known as the global food crisis. It had particularly different drivers. And one of the reasons, as you mentioned, that we see the deficit not being repeated next year. So for 23-24, our forecast is for the market to switch back to surplus, a relatively low surplus in terms of recent history, but a surplus nonetheless. And part of that is our assumption of more normal weather conditions. So at the extreme case, or at the extreme end of the weather spectrum last year were, of course, the terrible floods in Pakistan. Pakistan is quite a major rice exporter. Production there for rice fell by about a third due to those floods. We're expecting a partial rebound in 23-24, but not a full rebound. So that's perhaps one reason why the surplus is not as large as it has been in the past. We also had relatively intense heat conditions around the Yangtze Delta of southeast China, which perhaps didn't have that large an impact on production in terms of absolute volumes year on year, but it definitely weighed on what would otherwise have been expected growth. So hopefully that explains why we thought supply would be a bit tight in the year we've just had and will loosen in the year. Just to sort of finish up this point with demand. So over the last 12 months, we've seen quite strong rice demand growth over the last 24 months. And part of that reason has been a general rising price for all grains. So wheat, corn. Most foodstuffs have shown higher prices through COVID. So starting in 2020, but beginning to sort of get going in mid-2020. And we've seen that trend continue pretty much since then. So obviously COVID led to disruption internally. So the distribution of food within a country, whether that's from farmer to trader to consumer or the other way around, but also international transportation was disrupted. So we saw that most clearly in the rising price of seaborne freight, seaborne vessels. Another part was the prices in the fuel prices, which rose through this period. And of course, fuel represents a major input for farms. And of course, when oil prices go up, there are sort of various linkages between oil and agriculture, whether that's the biofuels market, commodity index funds, things like that. So there are sort of price carryover effects between the two. And again, those were acute in 22-23, if not the year before that as well. But in 23-24, as we sort of shift more into a post-COVID environment, particularly as the shock of February 2022 with Russia's invasion of Ukraine, the shock that prompted in global agricultural markets, as that begins to ease, it's not just the price of rice, but as the price of other products falls, that will reduce that substitution effect that I mentioned.
Yesterday, the Bureau of Meteorology Australia said that 3 of the 4 conditions for El Niño have been met. And last week, the Climate Prediction Center of the US said that El Niño is truly wrong. Now, how do you see El Niño impacting demand-supply balance in rice?
I think that's a really good question. And that's probably one of the major uncertainties, particularly from an agricultural point of view, that will color the next 6-9 months. So I think the first important point to make is that one El Niño differs from another in both intensity and duration being the 2 main ones. There's also a variable impact in terms of having an El Niño active may have a different impact on one area than another, obviously. Within that, I think for the rice producing regions of the world, so here I'm thinking of Southeast Asia, India, and then the wider area of South Asia, it tends to be associated, and again I say tend, because there are some periods in which a lesser El Niño, the effect is not really noticeable, but the effect tends to be warmer temperatures and drier temperatures, which both make rice cultivation in particular challenging. So obviously heat and reduced water will weigh on yields after the crop is in the ground. But of course, farmers, and there's a lot of coverage, around this El Niño. It's been in particularly the agriculture news for a couple of months now. And with the expectation of an El Niño on the horizon, farmers may look to adapt in advance. So quite a clear case here is in Indonesia, for example. El Niño in Indonesia tends, again, to be associated with drier weather. And so what you can see in farmer planting decisions is that ahead of an El Niño, they may start swapping what would have been rice plantings for a less water-intensive crop, whether that may be corn or something else. So those are the sort of general impacts. I think perhaps some of the coverage around El Niño this time has been focused on quite the near-term past. So there was an El Niño between the end of 2014 into the first half of 2016 that was particularly severe. And that had quite a large impact on global rice production, but agricultural production. So if we look at the 15-16 season, global rice production fell by 1.3%. But more importantly, global rice exports were down about 7%. And that drop in exports was led in the main by India and Vietnam. So now just to sort of narrow on India and rice production in India, again, the interaction between El Niño and the annual monsoon, which has just started, is the key variable. El Niño in general, and again, I keep stressing in general, is associated with reduced monsoon rainfall. It's not an exact relation. And again, the intensity of the El Niño is mediated on the final impact on rainfall levels. The other sort of uncertainty this year is that while El Niño is more of a global weather conditions, there's a more localized one in the Indian Ocean. the Indian dipole. And in this year, that is it's in a positive state as opposed to a negative one. And so that tends to be associated with higher rainfall. So you have these contradictory elements of reduced and higher rainfall. And I think to a great extent, the actual impact on production is going to be something that we not quite have to wait and see. But I think at this point, it probably is a little bit too early, especially with the delayed start to the monsoon over India.
How do you think India is going to be placed with regard to rice? Has the global market come to accept the export duties that India began imposing in September last?
So to start with India, at BMI, we're forecasting rice production of about 135 million tons. So that would be, based on our estimates, a 2% increase from last year. We also believe that the Indian rice surplus, so this is the rice over that season that's left over after consumption of that season, will increase by about 8 to 900,000 tons. That will allow for either or both of the accumulation of inventories or higher export volumes. India has also benefited recently, in our view. We revised up our estimate for the season 22-23 because in light of a later exit of monsoon rainfall, there was some quite favourable rainfall, perhaps a bit later than you would have expected, which has seen the estimate for 22-23 come up. We think recently as well, looking to the season ahead, we recently had the upward revisions announced to the Indian minimum support price scheme. We think that would be good both for production, in terms of it's an incentivizing prompt, but also domestic consumption. The impact of a higher minimum support price has the potential to make Indian rice exports that bit less competitive, and so an increased diversion of Indian-produced rice to the Indian market will play a role in stabilizing local prices, taking the heat out of any local price inflation, and will also allow for state-held inventories to be maintained, if not increased. In terms of where India is with its rice inventories, at the end of this season, the USDA forecasts that they'll be at something approaching a 5-year low. That sounds as though it's quite an extreme measure. I think it's worth putting that in context, which is that, of course, during COVID, with the expansion of India's food distribution schemes to ensure that during what was an incredibly difficult time, people were provided with food, that naturally saw an increase because there was just more being provided. So the fact that it's smaller largely reflects that the need for those COVID era schemes has been slightly reduced. So in and of itself, not particularly worrying. To pick up your second point on the impact of the Indian export restrictions, it's perhaps interesting. If you look at average rice prices, so we base our analysis on second month rice futures, the average price of those futures during October was actually slightly lower than it was in September. So our view is less that the decision to restrict exports of some rice varieties fuel price increases. Our view is perhaps more that it put a floor under prices. So it supported prices at their existing level rather than prompting price increases. And then since October, for the months that we have complete data for, rice prices only rose in 2 of those months. And in the month we've just had, May 2023, prices were actually lower than in August 2022. So that was the month before those export restrictions were brought in. And that kind of fits with the narrative I outlined at the start of this podcast, that we see that market loosening. And you would expect, as you switch from a deficit to a surplus, the market to loosen, which will weigh on price increases. If you look at individual exporters, so rather than just a futures market, but actually the prices being quoted by individual export prices, you can see there's a slightly differentiated impact in that those rice varieties to which India's export restrictions were applied have increased. So, for example, Pakistani 25%, 5% broken rice export quotations have increased. Part of that is the market, but there are also some conditions within Pakistan. I've mentioned the flooding. There are also wider macroeconomic challenges, but also Vietnamese 25%, 5%, and India 25%, 5%. So those rice varieties, perhaps impacted by the prohibition on exports of 100% broken rice, have shown some inflationary pressures. But if you look at the types of rice that weren't included in the export restrictions, it's a much more muted, neutral almost price response. So I think it's more to do, I think the way that it's unfolded is perhaps less a shock to the rice market as whole. It is perhaps one evolving factor in a market like all agricultural markets that has been under some quite serious stresses over the last 2-3 years, but is now beginning to unwind. So you have that narrative. It certainly perhaps supported prices and slowed down that process of unwinding, but it's hard to see a particular price impetus driven from the event. But if you perhaps draw below that, you have the different rice varieties perhaps reacting in slightly different ways.
Well, Thailand has emerged as the number 2 export in 2022, and it even topped India and Iraq market. So you see this continuing, particularly when there are reports from Thailand that say that rice production could worsen more because of El Niño.
So to pick up the last point first, there have been reports from Thailand that because of the expected reduction in rainfall from El Niño, there has been advice given to single crop rice this year rather than double crop. So that will obviously weigh on production. The two crops in a normal year, you would not expect the two crops to provide 50% each of production. That's not how that works. So it's not as though half of the rice output is under question. It's a much smaller percentage. And the big factor will still be the actual level of rainfall, because that will determine the yield of that single crop. In terms of Thailand as a rice exporter, it historically has been amongst the largest in the world, as you mentioned. So in purely volume terms, so I'm talking about tonnage rather than value, Thailand was the world's largest exporter until about 10 years ago. 2012 is the first time, at which point India overtakes in tonnage terms. And India has since then held on to that top spot. The story with Indian rice exports has been quite strong. I say quite strong, very strong production growth through that period. So even though the population of India is rising, and so rice consumption is rising, the differential between production and consumption has tended to rise and widen. And so as that widens, the larger the surplus you have, the higher exportable base you have. Now, as I've already mentioned earlier on, the last year or two, that surplus has switched to a temporary deficit. But of course, during the periods of surplus, you can accumulate, you can hold rice, you can build up your inventories, and you can export from that in subsequent years. So I think to us on our rice forecasts, so we forecast up to 5 years, we see quite consistent surplus growth, coming from India, but we see a relatively consistent flat surplus coming from Thailand. So after Thailand, you have Vietnam. Again, we see quite a consistent surplus, so we don't really see much change in the positioning there. If you move below Vietnam in purely tonnage terms, you have Pakistan and the US have switched position in recent years. In the very short term, as I've alluded to before, we would expect Pakistani exports to fall. That's largely due to the effect of the flooding on production. But again, in the long term, we see a recovery in Pakistan's rice surplus, which should allow for a resumption of that large export role.
And how will China's imports of rice be this year? And what sort of impact will that have on the rice market?
I think that's a really good question. I think a lot of what will drive how agricultural markets will unfold over the next few years will, to varying degrees of tightness, be determined by the evolution of Chinese agricultural trade. If we look at the recent past, so the last few years, China's increase in rice imports has largely been of broken rice, and it has largely been of broken rice imported from India. So in China, broken rice tends to be diverted toward animal feed rather than human consumption. So within that, or sitting above that, you have the wider story of the growth of China's livestock industries and the growing demand for meat in China. And so if we look at the impact that has had on Indian broken rice exports, in 2020, China imported about 1 million tons of broken rice. In 2021, about 2.5 million tons of broken rice. And in 2022, 3.5 million tons of broken rice. So we can actually see quite a quick pickup in terms of import demand. From the Chinese perspective, imported rice is actually quite competitive on the local market due to the low tariff rate quota that importers face. So there isn't too much differential in terms of the competitive offering, and that has also boosted the import demand. In the very short term, we actually think that Chinese import demand for animal feed might drop. This is a transitory issue, but it's due to heavy rain in China's wheat growing regions, which has seen the quality of the wheat grown fall. And as wheat's quality falls, it tends, again, not to be diverted to human consumption, but to animal feed. So in this sense, there may be an almost unexpected increase in China's domestic production of animal feed grains. But in the long term, we think that volumes will be maintained. We think that China, at BMI, we forecast China's rice self-sufficiency. So that's just the relationship between production and consumption. For us, it stays between about 95, 97% throughout our forecast period. So to a large extent, China is able to meet its own consumption needs, but we think it will maintain its position in the import market due to that competitive positioning of imported rice.
Because the global trade in rice is around 50 million tons. Now, within this, what we find is there are variations. Do you think the smaller variations are the ones that are really having a bigger impact on the price part?
I think it's a very interesting question, actually. I think if you compare the rice market, the global rice market, to the markets for wheat and for corn, for example, over a long period of time, the rice market has tended to be a bit narrower. And by that, I mean that the percentage of rice that is exported out of production tends to be quite low. So as you've said, annual export volumes of about 50 million tons compared to quite large production figures. So in this sense, we can see it as thinner. So a volume of rice, perhaps a reduction in export or a reduction in production, will have a larger impact on the market than the same volume of wheat and corn. So in that sense, it is that bit more sensitive, perhaps, than wheat and corn markets. So if we look at the deficit figure that we've forecast for 22-23 of just under 10 million tons, that is about 1/5, 20% of those annual exports. As I've said, we don't expect exports to fall by that amount, but it's just to put it in context of what is quite a large deficit. The sort of second point in terms of market sensitivity that perhaps counters the point I made about market thinness is that rice inventories are relatively high, even when you strip out the volumes of rice inventories attributed to China, which tends to hold very large inventories. There are still sufficiently held stocks to cushion some of these impacts.
Thank you very much, Charles. It has been nice talking to you. We're really enlightened by your views that took into account all the development that have happened across the world, particularly Asia, and also you have taken into account the developments with regard to weather and El Niño. Thank you very much, Charles.
Thank you for inviting me along.
Thank you very much. All the best.